With that, now we move on to Tunisia because Tunisia's central bank is committing monetary support for the recovery of businesses from the economic challenges brought about by the COVID-19 global pandemic. The board of directors of the country's highest financial institution said the move is necessitated to lessen or to lose the financial burden on businesses and households. Authorities are working on measures to create favorable conditions for businesses. Detail of that in this report.
The board of directors of the Central Bank of Tunisia explained that it deemed it necessary to continue to strengthen monetary support for the emerging economic recovery by deciding to lower its key interest rate by 50 base points to 6.25% for the main refinancing operations, 5.25% for the overnight deposit facility, and 7.25% for the marginal lending facility.
This decision should support the easing of monetary policy adopted since the outbreak of the pandemic and also lighten the financial burden of loans granted to businesses and households, helping them preserve their solvency. That is the ability of a company to meet its long-term debts and financial obligations and thus contribute to financial stability.
Experts argue that the lowering of the benchmark rate should support domestic demand, with prospects of a recovery in consumer demand, but risks still remain.
The current economic and social crisis has pushed Tunisian households to reduce consumption. That's how family savings have increased in 2020. If the situation improves, then domestic demand will follow. However, a second wave of the pandemic could paralyze consumption, and the central bank will have to intervene once again.
Members of the Finance Commission at the House of the People's Representatives said that the central bank's outstanding medium and long-term loans granted to businesses continued on an almost generalized gradual upward trend.
The coronavirus crisis hit hard the Tunisian and the global economy. Small and medium-sized enterprises suffered considerably. The central bank's recent move will help create favorable conditions for businesses and revive investment so as to restore the pace of economic activity.
According to the latest data released by the Central Bank of Tunisia, there was a generalized recovery in loans to individuals. The bank recorded 3.4% in the year ended July 2020, the highest level since February 2019. The Executive Board of the Central Bank of Tunisia reaffirmed its determination to continue to take the necessary measures in light of financial and economic developments. Experts assert that this period will be marked by the negative impact of the second wave of the pandemic on the country's economy.